Welcome to Ask a Tax Lawyer with Lance Drury. Attorney Drury represents individuals and businesses in disputes with the Internal Revenue Service and answers your questions about dealing with the IRS.
What does currently non-collectible status mean?
Well, Steve, what it means is that the IRS is going to cease all collection efforts against you because you don't have the ability to pay the IRS any money. Now, this is based upon financial statements that are provided to the IRS, and it's probably most common with fixed income people or people that don't make a whole lot of money a month. And so what the IRS does is they won't levy against your bank account. They won't go against any of your wages. They won't go against your Social Security. However, they will send you friendly reminders from time to time that you still owe the tax. And the significance of being placed into currently non-collectible status is the IRS only has a limited amount of time to collect the tax. Generally, it's 10 years from the date the tax is due, but there's a lot of things that can stop the running of the statute on collection. Fortunately, going to be placed into currently non-collectible status doesn't stop the running of the statute on collection. So for every day you're in currently non-collectible status, that's one less day the IRS can come after you. And we just had a case not too long ago. The guy owed about $300,000, and we've now run out the clock on all of that except for about $9,000 because we were able to get him placed into currently non-collectible status.
So with that in mind, can the IRS still garnish salaries and cease bank accounts, or does that go away too?
That goes away. They cannot levy against you. They cannot seize any property. They can still intercept any refunds, tax refunds that you may be entitled to, but they are not coming after your bank account. They are not coming after your wages. And that's a big thing because I've seen the IRS garnish wages up to 75% of people's take-home. And it's a continuous levy. So the significance of currently non-collectible is they're not going to take any monies from you during that time. Now, there's one caveat to all this, and that is down the road, if the IRS sees when your wages and income is reported to them in a year down the road and you're making a lot more money, they may send you a letter and say, we need to reassess whether or not you should still be placed into currently non-collectible status. And so we want you to fill out financial statements for us to see if you should still remain in that status or if you now have the ability to make monthly payments to us. However, if your wages never go up, if your income never increases, you're never going to be yanked out of uncollectible status. That's why for people with a fixed income or they're older, we know their income's not going to go up, they can just run out the clock on collection.
Okay, so let's use this as an example. I'm an older person. I'm on retirement, fixed income. Income's not going to go up. So, in effect, then, does the IRS cease collection efforts? Do I understand that correctly?
That is correct. As I said earlier, they will send you a friendly reminder that you owe the tax. They may also turn it over to a collection agency. That's one of the things that they just recently did, but that collection agency has no power to levy against you, to seize anything, and we just tell people if they're in currently non-collectible status to ignore those attempts at collection.
Let's say my income does go up, but it's not enough to pay the back taxes. Do they evaluate it and leave me in non-collectible status, or what happens there?
Well, if your income does go up, they do have the right to come back and look at your current financial picture, and that current financial picture may show that you should still remain in uncollectible status. It might show that you are able to make a monthly payment to them, but never be able to pay the full amount back to them before the collection statute expiration date. comes off. And so you might get set up in what's called a partial payment installment agreement at that point, where maybe you're paying them 20 cents on the dollar before their collection efforts must cease by law.
Are there any other options I should consider before trying to be declared non-collectible?
Well, that depends. If you're concerned about a lien and your liability isn't high enough, you might want to get set up on a small installment agreement, because if you get enough payments made, you can then make application for the release of the lien and even the withdrawal of the lien. But there's also something you need to consider once you are placed in currently non-collectible status, and that is if you're there and you want to get this problem taken over, you want the problem dealt with quicker and for the IRS to go away sooner, you might, after being placed in currently non-collectible status, to file an offer in compromise and maybe offer them a nominal amount to in full satisfaction of the entire debt, say $1,000 on a $50,000 debt. And the reason I suggest that is when you're put into uncollectible status, you might have 8 more years before the clock runs out. If you fulfill the terms of the offer, once that's done, they'll release any liens and everything's fine. The only thing is, for a number of years, you're going to have to be 100% compliant, which means you're going to have to pay your future taxes on time. You're going to have to file your future tax returns on time. And if you do that, you're okay. But if you fail to do that, then that full amount comes back. So that's something that you might want to consider after you're placed in currently non-collectible status, is filing an offer in compromise.
I suppose especially considering if you've got a number of working years ahead of you and you've been successful in the past, not that that's a predictor of the future, but maybe that's a good thing to consider at that point then.
Yeah, or if right now your economic situation is not going to change, but perhaps in 3 or 4 years you anticipate things are going to get better, you may want to consider the offer in compromise now and get it all done before you experience that increase in income.
Thanks for listening to Ask a Tax Lawyer with Lance Drury. Attorney Drury represents individuals and businesses in disputes with the Internal Revenue Service. Join us next time as he answers your questions about dealing with the IRS. Attorney Drury's website is lancedrurylaw.com.